What's up, guys? Welcome back to DCA. So today we're going to continue our discussion about realized price. And we've been talking about this for the last few days, and we're sort of going to wrap up this discussion that we've been doing with this topic here. So what is realized price? This is essentially the last time that a coin has moved on the Bitcoin network. So with that information, we can then determine what the average price that long-term holders own the asset is and what the average price that short-term holders own the asset. So with that, we can kind of then ask ourselves, well, what sort of behavior would we expect with respect to long-term holders versus wherever the price is? And, think about it like this. If you are a long-term holder in the asset, let's say, we'll just use Bitcoin as an example. If you own the asset and you are a long-term holder, meaning you have long-term belief in that asset, and the price drops below wherever you own the asset, well, you're going to view that as a buying opportunity. And essentially what that says is when the price goes lower and lower, approaching your cost basis or average price, you're going to start acquiring more because you believe in the asset and you believe in its long-term potential. And that's sort of what we've seen historically. When the price gets lower and lower, we see in general the long-term holders step in and start buying the asset. That's why we've never seen the price go very much below where the long-term holder average price is. And now why is that though? Well, it becomes a supply and demand issue, which I've said in prior videos now. When you fall down to these lower prices, the demand is obviously going to increase as the price moves down. It's a simple supply and demand curve. As price is moving down in a desirable commodity or asset, your demand is going to move up. So when you get to these lower prices, you just simply don't have the supply anymore, because supply means someone's selling it. And no one other than the short-term holders, other than typically retail investors who are capitulating out of fear and panic, are the ones selling. So short-term holders are selling out of panic in these ranges, and back here in May, and here in January. You have short-term holders panic selling, while long-term holders are generally buying more and more as the price goes down further and further. So it's a twofold issue. The short-term holders sort of panic sell, but they don't own as much of the supply as the longer-term holders do. The longer-term holders in these ranges own a much higher percentage of the supply. Okay? So when you get down into these lower levels, long-term holders take over, the supply of the asset dries up, and what you see is a situation where you have more demand than you have supply, so the price has to go up. And that's what we've seen in each case. Now, that doesn't mean that just because we've went down to the long-term holder price in the past doesn't mean we have to do it again, but it's worth noting anyway, because to invest in an asset and not understand what your upside and your downside is being an irresponsible investor. You should simply, it's not to say, it's not to be, overly bearish on the asset. It's to say that you're simply taking note of what the possibilities are. That way you're not caught off guard. You're not unprepared. You're not one of these people who's panicking if it happens. You're simply aware of the situation. You understand that it's within the realm of possibilities because it's happened in every market cycle. And you also understand that it's essentially presenting itself as an opportunity. So that's what we've seen in the past. And now specifically what I want to look at today, though, is this particular situation that has recently occurred, that it's essentially been happening ever since essentially dating back to December. So what you're seeing in pink here is over a 30-day period. These have been times when both the short-term holder average price, which is at 54K right now, and the long-term holder average price, they're both falling. Okay, this is the long-term holder average price in blue. And then in yellow, this upper line represents the short-term holder average price. So when you're seeing this in pink here, that represents a 30-day drop in both the short-term holder and the long-term holder average price. And what I want to point out to you is locations at where this has happened in the past. So it's actually been very rare for this to occur. So we saw this happen at points in 2012. We saw it happen in 2012 leading up to this market cycle, and you'll note that it was actually right near where the bottom occurred. You saw it then again at points in 2014. Okay, so not right at the bottom, but leading into the bottom, and then throughout 2015. Okay, so the key is we're only seeing this in general at times when we're very near the bottom. Then more recently in 2018, we saw it happen here right at this giant capitulation event at the end of the year, leading into 2019, where we saw it happen again for a very short amount of time. Then we saw it right after the COVID capitulation event. And now you'll note that basically from December into the early parts of February, we saw it again. So this indicates generally that we are at a point where both the short-term holder and the long-term holder average price were decreasing. So when does this occur? It typically is only going to be possible when you have very large price corrections and multiple of them within a shorter amount of time. And historically, we haven't seen this happen for Bitcoin very often, other than at a point where a market cycle bottom at least is approaching. Now, when I say approaching, I'm not referring to happening next month or next week. In fact, if you take a look at when did it first happen, starting back here in 2014, it basically went from 2014 all the way out to almost 2016, essentially. So about a year. Same thing, what we saw here. This first occurrence was at around 6K, basically the high 5K all the way down to nearing this bottom. But then we didn't really start making, a true recovery. We had this mini bull market in 2019 where we got up to, 12K or whatever it was, and then came all the way back down, at the COVID capitulation event. So just because we have something like this occur doesn't necessarily mean that we're at the bottom. But what has it meant? And it has meant that it has been a historic time to be buying the asset. In fact, you can think of it almost as, start acquiring now, because we're approaching the time where, you may not be at the best possible price to buy, but if you're dollar cost averaging in, you very likely would like to have the asset in the long term at these prices, because historically speaking, you haven't had another chance at any of these points where we've seen in the past. So if you take a look here, throughout here, within a year, you never got to this price again. Within a year, even less here, you never got to this price again. Back at the COVID capitulation event, you never got to this price again. Now, I suppose COVID, technically, you did get to the very early stages of this point right here. But other than that, you have not had another opportunity, once it's passed, to acquire the asset at these levels again. So I'm going to preface this one last time by saying this doesn't mean it has to happen again this way this time. However, when these events occur, they are historically excellent times to be buying the asset. And in my opinion, looking at all the different metrics that we've been looking at, while none of them necessarily suggest we're right at the bottom, and in fact, I think it's very difficult to say when you are definitively at a bottom, numerous metrics, both from on-chain to technical analysis, etc., indicate that while we may not be right at the bottom, in fact, it could go significantly lower from here. In general, even if it does go lower, it's typically not significantly lower. And if it is significantly lower, it's typically not for very long. And we're talking on the order of days to, possibly weeks. So in my opinion, this is an excellent time to be buying the asset. And we could be looking back at a point 2 or 3 years from now, and you may be kicking yourself for not buying a 40K Bitcoin or a 30K Bitcoin or 35K or wherever the price ends up. So that's kind of where I'm at, guys. Like I said, I'm the kind of person, I dollar cost average every Friday, and I use a dynamic dollar cost average strategy using the DCA index risk model. It's just how I approach the asset. If you're interested in signing up for the DCA index risk model, it's a machine learning algorithm model that I created. It's free. It's available on the Discord. You can head over there and sign up for it. On the Discord channel, we do a lot of discussion regarding the macro level picture of Bitcoin. So you're free to come over and join the conversation. We'd love to have you guys. So that's it for this one. Until next time, as usual, see you.